Late night, they ain't getting no rest. Work so hard, people think I'm obsessed. Cream at the crop, won't settle for no less. Headed to the top, arena so focused. Yeah, gorilla of the jungle, I've been beating on my chest. I learned from the struggle, it was all just a test.
Hey guys, and welcome back. So today I want to talk about Bitcoin, and we're going to talk about its correlation to tech stocks or gold. You know, there's been a lot of talk lately about Bitcoin decoupling from its correlation to tech stocks, following more of the gold path in terms of price action lately. So what we're going to do is jump in, look at the data, see what it tells us. Historically, we have seen that generally Bitcoin during uptrends and downtrends is treated a lot more like a tech stock, something that's a lot more risky, so we consider those risk on assets, a little bit more volatile. Recently, with this current price action, we have seen gold really outperforming, Bitcoin showing some good relative strength, so we're going to dive into the data, see what it tells us here. So we're starting off on our Into the Cryptoverse website here. So I've mentioned this previously. They are generous to allow us to share these tools with you guys. So if you don't have an account, come here, sign up for the free account, get the access to the data, have more information available to you. This tool here is a premium tool, but that's all right. You don't necessarily need this. I will show you a way to look at this correlation coefficient in TradingView as well. So technically what we see here is basically Bitcoin and its correlation to a ton of different assets here. So the max correlation is obviously 1.0. So what I want to focus on here is Bitcoin relative to tech stocks, relative to traditional markets, and relative to gold to figure out what that correlation is at currently. So we can also choose up here, you know, a ton of different time frames. So let's start on the lowest time frame, and this is what's going to tell you, you know, why people are looking at this correlation to gold, because currently right now the S&P correlation to Bitcoin is 0.62, while the gold correlation to Bitcoin is 0.70 for the gold to Bitcoin ratio here, and 0.58 for the S&P. Sorry about that. But basically what we see in the last 30 days, Bitcoin is more correlated to gold than the S&P 500. So interesting to see there, although we do see it is kind of a little bit even heavier correlated to a couple crypto assets, but interesting on the very low time frame, more correlated to gold than to the S&P. That's, I think, why people are starting to talk about this. You know, people in crypto kind of think on a really short time frame. It's sad to say, but a lot of people, I consider them almost like goldfish. The attention span in crypto is so short. You know, we forget what happened last week. It's all about the new hot shiny narrative, or the new coin, you know, or the new bias that's kind of supporting that thesis that the market needs to trend up. We just look at the data, we look at the charts, and we make our decisions based on that. We don't follow the herd. We don't follow any specific bias. We just follow the charts and the data. So looking here, we're going to flip to a higher time frame, and you're going to start to see a change in the correlation here. So if we flip to the 90-day, look at that Bitcoin correlation to gold, minus 0.26. So actually, when you look on a 3-month scale versus the 1-month scale, Bitcoin's correlation to the S&P is 0.68. Its correlation to Tesla, which is a major tech stock, Amazon, Alphabet, also major tech stocks, also Apple here. Although a little bit less correlated to Apple, we do see, generally speaking, around that 0.8 average correlation to major tech stocks. So showing here on the 90-day time frame, a lot more correlated to tech stocks, to the S&P, than it is to gold, and that's obvious right here. And then when we look on the even higher time frame, let's look on the 1-year time frame. So on the very highest time frame here, that 1 year or 1 year time frame, we see that correlation again. Although it is a little bit similar here, we see that 0.57 to 0.66. The correlation is still in favor of the S&P and of the larger tech stocks. So like Tesla here, Amazon, still holding that above 0.8 correlation. So that's what I say when Bitcoin is correlated to tech stocks. Despite what is happening in the short-term time frame, we need to look at the macro trend. So we can also go down here. We see this is just a running visual representation of that correlation coefficient. So looking on the 180-day time frame, we have these big runs here where we get really heavily correlated to the NASDAQ, and then that correlation drops as we go into the bear markets, reversing into the uptrends. So you see during the uptrends very heavily correlated, and then during the downtrends that correlation kind of working to the negative side. So what we see over here in this cycle specifically, I see a couple similarities. We have this first major extension of the correlation coefficient. We came back, we broke below the price scale here. So similar to what we saw over here, we got above price, we're holding above it, we broke below, came back down, same thing, broke below, came down here, swept these lows, came back up, poked just above this target here and got rejected, putting in a higher low. So we could be putting in this higher low right here. You know, it's going to be hard to tell until kind of after it's confirmed, but this is the potential we saw where we came in and bounced from this low. That actually was just the dead cat bounce rally for that for the asset for that cycle, and then ultimately just continued down after that into the bear market. So looking at the 180-day, you know, we are still more correlated to the NASDAQ than kind of less down here. If we look at a higher time frame, so we'll look at our 365-day again, we're starting to see that correlation coming down. So interesting to note, as the correlation starts dropping, that is kind of indicative of a bear market or a downtrend. So dropping here, we saw our downtrend, dropping in through here, we had this downtrend, dropping in through here, we had this down, or this kind of little trend in through here, but ultimately dropping again. So the correlation on the very high time frame coming down. So we'll flip to the low time frame, see what that looks like, and zoom in here. So yeah, based on the low time frame, came down, swept the lows, similar to, let's zoom out and look at the prior cycle as well and see if we can notice some similarities. So we'll take a moving average here just to smooth things out a little bit, you know, get rid of some of the noise. So, you know, a lot more extended in the bear market here, actually, which is interesting to see. We are seeing that correlation coming down, but it's curling up on the low time frame. So, to me, although people were saying the NASDAQ correlation was broken, we're going to be more correlated to gold, we're going to get that decoupling, you know, to me, it was just a normal move. You know, these correlations kind of fluctuate all over the place throughout different time periods. I'll flip over to our trading view chart here. And what I want to focus on, first of all, we have a bunch of different indicators open as well as our Bitcoin chart. So just looking here, I just want to look at some comparisons to prior cycles and the indicators that we watch. So we see here, we've got our vortex indicator on top, you know, just trying to pick out, could we be in that potential, you know, dead cat bounce, lower macro high, and bear market continuation. So let's look and see our indicators here. Essentially, what we have, the vortex indicator, when the blue line broke below the pink here and held below here, so you can see it consolidating down underneath. Same thing that we saw over here, broke below, consolidation underneath, broke below, consolidation underneath. We've currently broke below, so we might be in that consolidation phase underneath, but we can see I've shaded each of those areas in the price, or in the Bitcoin price chart that coincided with a downtrend or with a bear market. So downtrend here, downtrend, downtrend. We haven't yet confirmed that downtrend over here. One difference to the prior cycle is that we're actually above that 50-day and 200-day moving average, whereas here in the dead cat bounce, we broke below the 200-day, we came up, retested it from the underside, got rejected, and ultimately continued that breakdown. So the moving average structure is actually a little bit stronger this cycle, in my opinion. That being said, there are still similarities across various indicators. So the vortex indicator could be printing a bit of a similarity here. We're seeing, this is our correlation coefficient indicator. So this is exactly what we just looked at. If you don't, if you're not sure about this one, come here and just search in this bar, correlation coefficient, use it, and then you can kind of input any asset that you want to compare the correlation to the current chart. So for me, I've got gold here in the gold color, and I've got NASDAQ here in the red. You can see pretty much during cycle peaks where that NASDAQ correlation is really high, while the gold gold correlation is really low. Same thing right through here, really high correlation in NASDAQ, really low correlation in gold. And same thing that we saw right here, this really high correlation in the NASDAQ and the really low correlation in gold. So we basically noticed throughout Bitcoin's life, it goes through various times where it's more correlated to gold and more correlated to NASDAQ. And then it just flip-flops back and forth. It looks like an oscillator. So we can continue following this. We're not surprised to see this temporary decoupling or this temporary correlation increase with gold. That being said, it doesn't mean that it's sustainable or that it's going to be this way for the rest of Bitcoin's life. If we assumed that every single time that happened, we would have been proven wrong. So this kind of looks more like an oscillator to me. You know, basically depending where we are in the cycle depends how we're being valued in terms of correlation. So that's my thoughts on that for now, as well as what we looked at in this chart over here. So the correlation, you know, although it is in the near term more correlated to gold, a little bit less correlated to the NASDAQ, when we look on the high time frame, you know, things are still more correlated to tech stocks. It's a very new asset when you think about things. It's a very small asset when you think about things. So I'm not surprised to see it being more valued close to a tech stock due to that volatility, due to the newer age, the newer nature of the asset. But if we can continue to see this converging towards each other, it's generally not the best signal in terms of cycle structure. We're also looking here, we've got our Bitcoin pair strength indicator. So similar to last cycle, put in the highs here with those 52-week. So started the bull run, printed highs, you know, came in, consolidation phase, breakout run up to new highs, printing green dots all the way through here, ultimately coming back down into a bit of a mid-cycle correction and coming up to a lower high. So you can see that lower high on the Bitcoin pair strength indicator before that bear market move here. Same thing that we saw here. We had our kind of initial breakout here, those printed or those green dots printing, you know, subsequent continued price action, continued breakout coming here, and then again printing those green dots here. We could be putting in a lower high here. When you zoom in, you can see just a slightly lower high on the Bitcoin pair strength indicator. So that's another thing we need to watch. If that confirms, it could be indicative of what we saw over here as well. Moving on to our directional movement index, what we see is that blue DMI positive line trying to break above the orange DMI negative line. If you zoom in nice and close, I know it's hard to see, but it's just trying to poke out and it looks like it's curling back over. So this looks to me like it could be a rejection. What we see here, we're stuck under that ADX line. The ADX line is trending down below 25, so losing that trend strength, you know, they're coming to the end of that momentum. Similar to over here, we saw that blue line try to break above these two lines here, ultimately getting rejected, breaking back below into that bear market move that we saw through here. Same thing that we saw over here, trying to break out, ultimately not able to hold it, and same thing over here, breaking below, not able to get above those two, the DMI minus and the ADX line. And ultimately, that was our bear market move. And RSI, another one we're going to look at, lower highs on the RSI with that rejection rate kind of here. So we pretty much put in that lower high. RSI tried to break out again, ultimately gets rejected and continues in that downtrend. Same thing that we saw in this cycle here. Same and kind of that similar peak right there, that little poke out. So still lower highs, getting rejected and coming back below to those more oversold areas, which is more indicative of that kind of bear market bottom. Same thing here, we put in our first initial peak, secondary peak, lower high. That was a bearish divergence on the high time frame. I've talked about that previously, and we see our RSI poking out but looks to be rejecting a little bit right above that line, similar to maybe what we saw here as well as right in here. So we need to watch that. You know, that is a similarity to the prior cycle. So we need to pay attention, just looking at that. So that's pretty much what I wanted to talk about. There is an argument to be made that we could get another leg up. I do like the way the moving averages are stacked right now. It's not like over here. We didn't get our confirmed bearish cross, and we aren't stuck under those two moving averages. We're actually above them. So for kind of a technical macro trend, we could get that continuation if we get relief in the stock markets, if we start to see some continued huge strength. There's a lot of inflows coming into the Bitcoin ETF, so that's very promising. But we need macro de-escalation. We need some bullish economic numbers to print to support this narrative, to support this third leg up, in my opinion. Otherwise, there is a lot of technical factors similar to other prior cycle tops, so we need to be prepared. How are we prepared for this move? Essentially, we've de-risked already above $97,000 to $100,000 Bitcoin. So we're already we've de-risked ourselves above the current price. You know, we were swing trading during the downtrend, the choppy price action. We made about 46% returns on our swing trades. We bought some stocks, we bought some indices with the profits that we used from trading. So we've maintained that core cash position. We've maintained our core holdings, so our Bitcoin, our miners, anything that we have strong conviction in that we want to hold for years, potentially if not longer. So looking at potentially a 5 to 10 year time frame is going to be the lower risk investments, and we've hedged ourselves. So we have a few positions in a worst case scenario. If things break down, you know, we do have risk off assets, risk off positions that will benefit. Or if we get another leg up, we still maintained our core exposure, and we'll look to add strategically at strong technical setups as we go on. So that's it for today. I just wanted to talk a little bit about the correlation of Bitcoin to gold and the NASDAQ, as well as looking at prior cycle tops, prior cycle bear market periods, and a ton of different indicators that can help give us an idea of where we are in the cycle. So thank you so much for watching, guys, and I'll see you in the next one.